there, good afternoon and welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much as always for tuning in. We surely started the day on a strong footing, continues to be in the green, the market, but come off a bit from the day's highest point as of now. Look at the Nifty, right? It's below 25,000, 24,900 is what the Nifty is managing to trade around as of now. 24,917 precisely, up 1% in trade. Now, when you look at it, bank, that's managing to hold on to some bit of a gain, but again, that also came off the day's highest point. So keep an eye out on Nifty Bank. Look at it. Significant decline from the day's highest point is what we're seeing for the Nifty Bank, and then it's stabilized around that mark again at 55,700 levels. Now, mid and small cap continues to do well. Look at the advance decline ratio, clearly in the favor of advances versus declines today. So no complaining on that front for the broader end of the market. Sector specific, let's talk about that. We had Nifty IT, that was only one sector that was trading in the red in the morning. That was down almost 1/10 to 2/10%, but now that has also seen a further decline coming in, and Nifty IT is down almost 5/10 to 6/10%. Pharma pulled that up. Nifty Pharma has also slipped in the red now, so that is important to watch out for. Key to watch out for where these sectors are going to be headed, and on that, Nifty Media, that's also moved into the red now from the green. So we have three sectors now that are trading in the red versus the other sectors managing to hold on to some bit of a green. But yes, that's how the market setup is looking like. Whether we'll sustain the levels, which side are we going to be headed in the next couple of hours will be key to watch out for. But on that note, let's get started with the show, and this is the show where we solve all your stock related queries. To do that, we have Ashish Kyal, Chartered Market Technician, author at Wave Strategy Advisors, and Gaurang Shah of Geojit Financial Services joining in with us this afternoon. Ashish as well as Gaurang, good afternoon. Thank you so much for giving us your time as always. Ashish, would you want to comment in terms of levels that we should be keeping an eye out on today? Because after 25,000, we've seen some bit of that profit booking, maybe is what you could say, coming in for the market.
Hi, Vinny. Afternoon to you and Gaurangji as well, and all the viewers. If you look at markets, I think we had a stellar start with more than 250 points gap up, and we are still sustaining there. So I think it's just consolidating at these levels, and it's a very positive sign. We can see that on the upside, Nifty found some kind of a hurdle near 25,020, but I think that's going to be broken out soon. We should be headed towards 25,300 levels. On the downside, the support is going to be around 24,730, 24,740. So use any kind of dip as a buying opportunity, aiming for the target of 25,300. And Bank Nifty should also continue to outperform. We have seen some profit booking in Bank Nifty from the higher levels, but as long as the gap is intact, I think Bank Nifty should also continue to move higher eventually. On the downside, the gap area around 55,470 is an important support for Bank Nifty, and we should be moving towards 56,500 even on Bank Nifty.
Okay, on that note, let's get started. The first query for today, we have Vishal, who's writing to us from Noida. He's holding 80 shares of Honasa Consumer. The price is 240 rupees per share. He wants to know if he can look to add more of Honasa Consumers now. As of now, stock is trading at 286. Gaurang, good afternoon. Honasa Consumers, Q1 numbers, good set of numbers that came in from the company, better than what the street was expecting. But does it merit buying at these levels some more?
Thank you so much, Vinny, for having me on the show. Good afternoon to all the viewers of CNBC TV18, to you and to my good friend Ashish Kyal. A small disclosure, all recommendations are a part of our research team. Our company, Geojit or we do not have any personal investments in the recommendations given across, nor do we have any financial interest. There is no conflict of interest either, but we give recommendations to our clients on similar lines. They might hold their position. Now, to answer your question on Honasa, well, I think we had come out with an IPO note when the IPO was there, which was a long time back. Post that, we have not covered Honasa as a fundamental investment idea because of various reasons. First of all, the listing, post the listing, the concerns, and of course, the elevated competition as far as the e-commerce platforms are concerned. So I think there are better alternatives to look at from a long-term point of view. If you ask me, if you're looking at e-commerce or quick commerce, then my sense is that Zomato stroke now Eternal will be a good long-term investment idea. No specific comments on Honasa because we don't have coverage now.
Okay, sure. That's the view coming in there. Better bets. That is what Gaurang is highlighting. Ashish, on the charts and technicals, currently at 286, does it merit the viewer adding more?
Yes, if you look at Honasa, we can see that about 3 days back, the stock had a good gap up opening and post that it is consolidating. As of now, one can continue to add positions here, but maintain a stop loss of around 273 levels on the downside. We can expect the stock to move towards the level of 310 over near term.
Okay, keep an eye on those levels over there for Honasa Consumer. Let's move on to the next query for today. We have Karthik Kumar, who's writing to us from Mangalore. He's holding 2,000 shares of Bharat Electronics, 70 rupees per share, making a good amount of profit. He said that should he continue to hold the stock for 3 more years? Gaurang, your view, BL, the viewer is making good amount of profit. So should they continue to hold, maybe book out some profits and invest somewhere else?
Well, it's a good long-term investment bet, Vinny. And as a disclosure, we have a buy/hold recommendation on BL. Numbers for the first quarter were much better than what the street estimates were. The order book is very, very strong, and equally is the capability and capacity of the company to execute the order book. The only thing is, if you decide to invest in defense-related companies, my personal view is that you should have at least 3 to 5 years plus kind of time horizon. The reason being, these order books are very complex, very precise, and high technology oriented. It takes time to execute those order books and translate it into top line and bottom line. So have a long-term view, hold on to BL from a long-term point of view.
Okay, can continue to hold BL from the long-term point of view. Ashish, your view for BL. Would you also suggest the viewer continue to hold it for 3 more years?
Yeah, I can see on the chart that if he's bought at around 70, it might be in the year 2022, and he has been getting fabulous return in just 3 years of time. And overall, the trend is still positive from the medium to long term perspective. Or short term, there is some kind of a pressure, but continue to hold over here. We can expect a move towards the level of 425. On the downside, the support for the stock is going to be around 360 levels.
Okay, keep an eye out on those levels over there for BL. Next query for today, it's an investment query. We have Sundar, who's writing to us from New Delhi. He is saying that he wants to invest in UTI AMC stock, and he's asking what should be the target. Is it right to look at this one right now in this space as well? Gaurang, among the players, is UTI AMC something that you would look at currently, given the market scenario, given everything that's happening? Or are there other players or better bets that they can look at?
So really, no specific comments on UTI, but since the question is whether you should invest or not, and since you asked me about alternative investment ideas, so we like the AMC space. And I believe our view is that Indian capital markets are going to do well over the next 3 years, 5 years, or maybe a little bit longer time horizon. Then strong AMCs will also perform better because they are like directly correlated to each other. So we have positive coverage on our preference would be HDFC AMC or Nippon AMC.
Okay, preferably it is HDFC AMC or Nippon ASC, and AMC as a sector can do well given that Indian capital markets are expected to grow. On the technical front, Ashish, UTI AMC, is that a correct one to enter right now? Target, what should they be looking at?
Yes, if you look at UTI AMC, I think there is a very important price action support area at 1300. The stock in the recent fall also managed to bounce back from that levels. On the upside, we can expect again it to reach towards the level of 1500. One can look forward to invest into the stock maybe for near term or also for the long term perspective. And on the downside, maintain a stop loss of around 1320 level. So 1500 is the target, 1320 is the stop loss for near term.
Okay, keeping an eye out on those levels over there for UTI AMC. Let's move on to the next query then. We have Kamini, who's writing to us from Pune. She's holding 100 shares Tata Motors at a price of 400 rupees per share, asking if she can buy more, and she wants to add more. So today we have a lot of queries, Gaurang, I think, where people are just looking to add more. What's your view for Tata Motors?
Honestly, Vinny, this speaks very loud in terms of the maturity level of investors. Seriously, I mean, had it been for a couple of years back, this kind of correction would possibly lead retail investors to run out from market. But it's a good matured mentality. Investors are wanting to hold on to good investments and add to it. So on Tata Motors, first of all, hold on to it. We have positive coverage on Tata Motors. If you want to buy, let today's euphoria settle down. Maybe at lower levels, you can definitely add on to it.
Okay, can look to add on to Tata Motors, maybe at a lower level, not right now, not today's level, maybe when you see a bit of a correction. Ashish, what level can they look to enter then at?
We have personal holdings as well in Tata Motors, just as a disclosure. And any dip from here towards the level of around 667, 670, which is the gap area, use that as an opportunity to buy the stock. I think it will consolidate for a few weeks or months, and we can expect a very good run up in the stock as well. We can clearly see the peers like Maruti and others have started performing well. Tata Motors should eventually catch up. On the upside, 750 is the target that is what we can expect, and use any dips as a buying opportunity.
Okay, look at tips as a buying opportunity for Tata Motors. That's how we're coming in on the fundamental and the technical front. But keep an eye out on those levels over there as well. But on that note, let's slip into a very short break, viewers. Don't go anywhere. We'll be back with more of your stock-related queries after the break. Welcome back to Your Stocks on CNBC-TV18. We still have with us Ashish Kyal as well as Gaurang Shah to solve all those stock-related queries that you all have sent us. Let's keep it going with those queries then. We have the next query from Brijesh Jain, who's writing to us from Coimbatore. He's holding 200 shares of ONGC. This is at a price of 70 rupees per share. Gaurang, he wants to know whether it merits staying invested currently. He's making a profit on this one.
Well, so, Vinny, look, oil exploration, defense, cap goods engineering, these sectors need a little bit of longish time horizon if you have eventually decided and understood which company you want to invest in. So from a long-term point of view, we have a buy stroke hold recommendation on ONGC. And I was listening to the comments of Minister Puri 2 weeks back with respect to our dependency on imports of crude oil, energy, basically. And there's a lot that is happening within India as far as natural resources are concerned, whether it is onshore, offshore or ultra deep waters. And according to my understanding, I think the exploration policy, there has been some tweaks and changes to attract not only government companies, but also for private players to reduce our dependency in terms of import. So long-term, hold on to it, ONGC.
Long-term, hold on to it. Ashish, what's your view on the charts and technicals, right? I'm asking this why because, in the last 1 year, we've seen a bit of a downtrend that's come in for ONGC. So, it doesn't merit maybe that, get out, book your profits, maybe again buy it at lower levels or continue to stay invested?
If you look at ONGC, yes, the stock has underperformed. We can clearly see that happening. It has been consolidating in a broad range of around 250, 253 levels on the upside, and on the downside, the support for the stock is around 230. So it's going in a very broad range. But we can expect a breakout soon because it has been some time. It has been in the entire year, it has moved in this range. So continue to hold on over here. Maintain a stop loss of around 230 on the downside. And on the upside, once the stock manages to cross that 252 mark, I think there is going to be a very strong trending move emerging. So watch out for those levels, and post 252, we can expect it to go towards 275 or higher levels as well.
Okay, keeping an eye on those levels over there for the stock. That's ONGC for y'all. Let's move on to the next query for today. We have it coming from Ms. Sharma, who's writing to us from Mumbai. She's holding 123 shares of Praj Industries, and this is at a price of 529 rupees per share. Now, a long-term investor wants to know the outlook coming in for the stock as well. In terms of Q1, also numbers, revenues had seen a decline. Profits were also down by 94%, but obviously there was an exceptional gain in the last quarter. That's why this time we saw that a bit of a decline that came in terms from a year-on-year basis in terms of profits. But on the technical front, Praj Industries, nothing exciting that's happened. Last 14 days I'm seeing that is also seeing a decline. Last 12 months, 42% decline as well. 14 days, around 12% decline is what we're seeing. Ashish, on the charts and technicals, what's the word for Praj Industries?
The Praj Industries about just 3-4 days back gave a very big gap down, and it's still moving on the downside. My advice will be better to be out from an underperforming stock, which has moved from nearly 850 levels and now towards 400, and still there are no signs of reversal. We are still not seeing any kind of accumulation in this stock. It's better to be out from here. Invest into something like an outperformer, where I think two-wheeler auto segment can be a very classic bet at the current levels. Also, Hero MotoCorp is one of the stock that one can look forward to add. So switch out from here into an auto space.
Okay, switch out of the stock. That's a word coming in on the technical front as well, and maybe look at something in the auto space. Next query we have is from Chennai, we have Vijaya Kirti who's writing to us from there. He's holding 550 shares of REC. This is at a price of 600 rupees per share. Wants to know the future prospects of his investments in REC. Gaurang, your view for REC? Obviously they give dividends. You do have that payout that comes in as well. But as a stock, also seen a good run up. Does it merit continuing to hold it?
So, again, Vinny won't give specific comments in terms of Bison, but it's a good company in terms of power transmission, distribution, and the entire change of policy that the government has put in place for power generation, power transmission, distribution, and power equipment manufacturing companies. This stock from 2023 to 2024 and maybe early part of 2025 saw a fantastic run up. Now I think it has gone into a consolidation zone. But the outlook for the company in terms of performance, pure performance, looks very, very strong, given the fact that we are going to add huge amount of new power generating capacity. And with that, you are going to need services which is provided by companies like REC, PFC, or Power Grid, as a matter of fact. It's a good company, no specific comments.
Okay, good company, no specific comment as of now. But Ashish, like Gaurang was also mentioning, in this last 1 year, after that sharp run-up that we saw for REC, now that consolidation has come in. Is it a bit of a worry, or should they look at maybe averaging at these levels as well? Is that an option?
I would not recommend to average it out because we are not seeing any kind of a positive price action on the charts as of now. It looks to be forming a triangle pattern, consolidating in a range. I think maintain a stop loss of 366. The risk is less at these levels to get out from. 366 is a good stop loss. And if the stock reverses, there can be a good potential on the upside at 450 or higher level. So hold on, maintain stop loss of 366.
Okay, hold on, maintain a stop loss over there is what Gaurang is saying as well. I beg your pardon, Ashish is saying as well. Let's move on to the next query for today. We have Himanshu Dhar, who's writing to us from New Delhi. He's holding 100 shares of Eternal, which is at a price of 200 rupees per share. Gaurang, you did say instead of Nykaa, you can look at something like an Eternal. So they want to know if they should continue to remain invested at these levels or maybe book out some bit of the profit.
Well, I think if time is by your side, then Mr. Dhar should definitely hold on to it. I think there is a lot that is going to happen, Vinny, in terms of Zomato stroke Eternal. The asset that they took over, that is the provisioning delivery platform. Earlier, people thought that it was a heavyweight on the balance sheet. But now, fast forward to the current scenario, I think this quarter gone by, that platform has delivered much better than what the food platform has delivered. So we have a positive coverage on Zomato stroke Eternal. If your time is by your side, kindly hold on to it.
Okay, time is by your side, hold on to it. And Ashish, your view on Eternal?
Yes, so the view remains positive because the stock hit the lifetime high levels around 320 in today's session, I suppose at 323, showing some minor profit booking, but the overall trend is positive. Continue to hold on over here. We can expect it to move towards a level of 350 or higher on the upside as per the pattern target. And the support for the stock is going to be around 299 levels.
Okay, keeping an eye out on that. Let's move on to the next query for today. We have K. Padma, who's writing to us from Andhra Pradesh. She's holding 5 shares of Nestle. Price is 1,090 rupees per share. Now, she's a long-term investor, wants to know if she should continue to hold Nestle. Gaurang, Nestle, obviously, it's nothing wrong with the company. It's a good company, big company. But in terms of returns, long-term investment, should they continue to hold this?
I think things are getting to change for better for the entire FMCG pack, Vinny. And after the announcement from the Red Fort on 15th of August by the Honorable Prime Minister in terms of changing the GST or introducing the new avatar 2.0 of GST, I think this is one sector that will get benefited to a great extent. Along with that, you have positive tailwind in the announcement in the budget by the Honorable Finance Minister. Good monsoon, spendable income from semi-urban rural India is going to go up. That will give traction to the volume growth number, and that will give positivity in terms of sales as well as bottom line. We have a positive coverage on Nestle. Hold on to it.
Continue to hold on to Nestle on the fundamentals. On the technicals, Ashish, Nestle, continue to hold on to this one?
Yes, it's up by nearly 5.5% today. We can clearly see it is outperforming the broader market right now. And we can expect some kind of consolidation. But hold on, because the low which it formed around 1,080 has been a very, very important low. Multiple support levels can be seen over the past 1 year. and it has rebounded from there. So hold on, we can expect on the short term, we can expect it to move towards the level of around 1240, 1250 on the upside.
Okay, continue to hold Nestle on the technical front as well as on the fundamentals. But that was the last query for today, gentlemen. Thank you so much for joining us and as always helping our viewers solve all those stock-related queries. Quick check in terms of the market is what is it that doing right now? So market as of now is managing to hold on to what it was, 24,900, about that mark. The Nifty is continuing to trade at. Up 1% in today's trading session, 290 points uptick. We've seen that gap up and it's managing to hold on to that. So not anything that we'll be complaining about in today's trading session. Broader end of the market continues to do well. Advance decline ratio in the favor of advances continuing to be that, right? Because at one point of time, we had 2,000 stocks which were on the positive side. Now it's around 1,800 stocks. Slight bit of a decline there from the day's highest point for the market, but advance decline ratio still clearly in the favor of advances versus a decline that we were seeing coming in. And, some bit of the decline furthermore has accentuated, especially coming in for those Nifty IT as well as a bit in terms of the media space as well. But all in all, a good day otherwise is what we're seeing as of now for the benchmark indices as well as the broader end of the market. But with that, we're absolutely out of time on this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. Remember, you can always email us your queries and that email address will be flashing at the top of the screens for you all. So do send us your queries and we'll get them solved with our experts on Monday, Wednesdays and Fridays. But last hour of trade is still left. Don't go anywhere. You have closing bell up next for that.